Welcome to the program. Today we'll talk about the central bank's change of tack and what it means for markets. We'll look at the savage sell-off of TPG and we'll discuss BHP and whether it's a buy. I'm Marty Switzer.
I'm Peter Switzer and we're mad about money.
I was going to say, where's Paul Rickard?
Yeah.
Was that
Holidaying in Florida with probably a cabana on or something like that. Bludger.
First question, Pete. Central banks, obviously been a big change in tack. Markets are very subdued at the moment on the idea that the Fed may raise, but probably not. No. But also the fact that the Bank of Japan is possibly running out of money. Give us the synopsis on what's going on in the world of central banks and what it means for markets.
Well, the Bank of Japan is running not out of money, it's running out of ideas. They know that their money stunt isn't helping. And I think they're trying to say to the Abe government, it's your turn. It's got to be fiscal policy. Monetary policy is not getting the Japanese out there spending, investing and growing. So today's decision by the BOJ is going to be very, very interesting and the market's going to watch it very, very closely. And if he basically says, no more, I've got nothing left, there's nothing left in the locker, well, it's going to be a fiscal policy. And how the market reacts is going to be very interesting.
And then obviously the big one is the Fed. They're meeting this week. I think economists talk about a 22% chance of raising rates in September. Your thoughts, a December rate hike more likely?
Yeah, I think so. Look, I look at it this way. If they raised, they would actually shock the market and the market would go down pretty heavily, I think. And that is not what Janet Yellen wants at this point in time. The economic data is good, but without being great. And if you sort of start spooking consumers and investors and business by hiking before everyone expects, before the US election, you got Donald Trump getting closer in the polls. And
Do you think Trump can win?
Well, I wouldn't have said that 2 or 3 months ago, but the pundits are saying now he's a damn good chance. And Hillary with her health problems, that's not a good look. You know, that terrorism in New York over the weekend, that's more pro-Trump than anti-Trump. You know, I'm getting worried in many ways. I know the market will not receive it really well.
So are you expecting a market sell-off, or do you think we'll grind higher?
If Trump wins, there'll be a market sell-off. It'll be a buying opportunity. I don't think he will ruin the economy, but he will spook markets. So I think that's the important thing. But Marty, one thing I will say, I've got this in Switzer Daily today, there's an interesting chart that shows you that 24 hours before a Fed decision is one of the biggest determinant on what happens to Wall Street over an entire year. Those 24 hours and all those decisions over the year have a really big impact on the S&P 500. And I show a chart where they take out those days before a Fed decision, and the S&P 500 actually falls.
Moving on, TPG, a bit of a darling stock at times, was sold off savagely yesterday, down over 20%. Talk us through what happened there.
Yeah, well, Mr. Teo, who's been the guy behind TPG, he's been on a tear. He's taken over IINet, and that's been a really big coup. Telstra, I think, has
cheap broadband.
Yeah, and I think Telstra has suffered because of the success of TPG. A lot of experts have been in the corner saying we like TPG.
Well, they do unlimited caps, and it's cheaper.
Yeah, and I don't understand the potential of it. But the interesting thing was they reported a really nice profit, but they also, in their outlook statement, basically said we have to service 500,000 households with capital expenditure, laying stuff on the line, fibre and all that sort of stuff, and it's going to cost a lot of money.
And their pricing model's probably been too cheap.
Correct. And I just think
the TPG and IINet are the two that are offering unlimited broadband, and obviously in the world of streaming now, a lot of customers are probably hitting their caps, and that may be having some impact.
That could be as well, but certainly the big decision yesterday from the analysts was, hey, we didn't see this coming, and that's why they've sold it off big time. My view is there's probably going to be a buying opportunity for this company because it's become a quite a substantial contender and player to Telstra and Optus and Vodafone, but I think there are probably a few more days of negativity before the right levels reach. I think the company's good. I think the company's got a pretty sound model, but when you get big, you've got to spend big, and I think the analysts totally miss this.
BHP, iron ore price is holding steady at around $55. Some broker reports came out yesterday upgrading BHP. Talk us through what happened yesterday and your thoughts on the company in general.
Yeah, I should also throw in the new boss of Rio, the French guy, Jacques Lucas. They call him, he's a French guy. Anyway, he actually is very, very positive about commodity prices for Rio. And he's sort of, the analysts are agreeing with him that the outlook for resources is better than it was a year ago. A year ago it was a terrible view on resources. That's when BHP went down to $14. It's now hovering around 20. Some of the targets are 24, 25 bucks. Now, where does it all come from? They must believe that the global economy is improving.
And the China story is still positive.
The China story is positive, even though there was one negative story about China out this week. But there always is. The bottom line is there's a belief that the global and the Chinese contribution to the global economy is going to be good enough to bring resource or commodity prices up, and that affects BHP. And a lot of I think it was Credit Suisse's long portfolio last week, they put BHP back into their long portfolio. So for a long-term investor, they're basically saying miners are back in.
That's all we've got time for. I'm Marty Switzer.
I'm Peter Switzer, and we're mad about money.